Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms such as our 21 SPY and ES mean reversion systems with approximately 90% winning trades, and of course our awesome KISS systems, which have been knocking it out of the park and really pretty spectacular. You should check it out. Anyway, I hope everyone had a wonderful Easter holiday weekend. Many of you I know went out of town, myself included. Anyway, today it's Monday, April 1st, and we're going to do a deep dive technical analysis on the market here. This is our backend recorder for our standard web page format for our website. I'm going to go ahead and get that started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, April 1st newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Again, I hope everyone had a nice Easter holiday weekend, spent some time with family, etc. I personally went out of town. We have some family up in Chicago. I live down near the St. Louis area, so we went up there for the weekend and got back late Sunday. Anyway, as far as the market, like I said, no major technical changes today from what Steve Nelson discussed on the weekend. Hopefully you listened to the weekend newsletter. Again, obviously, we're seeing some shots across the bow in the market. We do believe we're close to some decent pullback in the market. Now, whether we have one more slight move up or not remains to be seen. But we're getting late in the game. Again, most people know that. We've had a hell of a rally since the late October lows. And the market's due for some sort of correction pullback. Again, you want to use a simple analogy. Think about, let's say you have a runner and he sprints as hard as he can. Well, he eventually gets tired and needs a rest. He needs to rest so that he can regain his breath and then continue to run the race, right? The market's the same way. It can get exhausted. Corrections, pullbacks are needed in the market, and they're healthy for the market. They allow the market to regain energy, set up trading patterns for the next move up. When the markets just run up and run up and run up, they eventually get tired and they don't have any energy left. Anyway, again, just a simple analogy, but again, no major technical changes have occurred. We're still holding the uptrend lines in the daily charts, 20-day moving averages, stuff like that. But again, definitely we want to be mindful here that we could be close to something. All right. One thing to note today, the US dollar had a very strong day, as did the 10-year treasury yield. Okay, so we want to keep an eye on those. That big move up in both of these instruments caused gold to pull back off the highs. Gold, for example, was up $50 on Sunday evening when the futures opened, and it pulled way off those highs, ended up about $20. Still ended up nicely for the day, but well off those highs. So we want to keep an eye on that. We'll also discuss some of our systems, mean reversion systems. We have an open short on the exhaustion short 2, which triggered last week. Otherwise, important economic news this week. Like I said, we had the ISM manufacturing PMI today, JOLT on Tuesday, OPEC meeting on Wednesday. Also, Fed Chairman Powell speaks on Wednesday. And Friday, remember being the first week of the month, we have the monthly payroll report. That's going to be looked at. Again, plenty of Fed governors speaking this week, as you can see. And let's go ahead and get started here. So let's talk about the systems. First off, this table shows you the BPT basket from the KISS systems. So today, out of the basket, 3 stocks had new smart trailing stops generated. Google, GLD, that's the gold ETF, and GDX, that's the gold miners ETF. Okay, you can see what's open here on the basket. Awesome gains here. Coinbase, the KISS system's up 77%. Meta, it's up almost 41%. NVIDIA up 81.4%. SSO, that's the 2-time leveraged ETF, it's up 40.7%. UPRO's up 64.5%. That's the triple long ETF for the S&P. Awesome gains here on the KISS systems. Again, a lot of you have been participating in these, and I hope you've been enjoying these. Next, talking about some other systems. So last week, one of the mean reversion systems finally triggered. We haven't had many mean reversion trades since late last year because the market's just been on this momentum uptrend. All right. Mean reversion, usually by pullbacks and uptrends. And we've had hardly any pullbacks, very shallow pullbacks since that low in late October of last year. The pullbacks have been too shallow to really trigger many mean reversion trades on the long side. That said, we've had such a run that one of our exhaustion shorts triggered last week, the exhaustion short 2. Again, as the name suggests, it's attempting to show an exhaustion in the market. These are very difficult to trigger. They only trigger after the market's had an extended period above a short-term moving average consecutively and overbought RSI. In fact, this trade has only triggered 9 times since 1995, so it's extremely rare. Again, this short is still open, no changes here. This is the exhaustion short 2. There's also an exhaustion short 1, which has not triggered. Next, image number 4. So here's the SPY mean reversion systems. This shows you this year and of course 2023. You can see 2023 we had about approximately 32 mean reversion systems trigger for the SPY ETF. And this year we've only had 4 so far. We had a couple longs early in the year in January. The trend pullback, S-Trap, QE, Momo, those are systems that trigger longs on shallow pullbacks and strong uptrends. And of course, we have this most recent open trade, which is the exhaustion short on the SPY. Okay, now this trade can have up to 2 entries. Right now it has 1 entry and the trade is still open. Okay. Next, here's some examples of that exhaustion short condition. Again, it's only occurred 9 times since 1995. So you can see it's an interesting trade. A lot of times this triggers not at the end of a trend. Sometimes it's in the middle. You get a quick pullback and then the market continues going up. And then once in a while it'll occur at a pretty decent top, like you see here on the middle left, where it caught a high there in January 2018. That ended up being a pretty good top. And it caught that. All right. So remains to be seen what this trade looks like. Does it catch a major top or is it just a shallow pullback? Finally, image number 6. Here's the trade statistics. Like I said, there's only been 9 trades since 1995. 100% of them have been winners. Small drawdown, only about 1.2%. Average hold time about 6 days, 6.5 days or so. So 6 to 7 days. So generally a short-term trade. Next, back to the general market newsletter. So item number 7 shows the index sector table, what transpired today. You can see sort of a bifurcation today. The S&P and Dow and Russell were down, while the NASDAQ was slightly up. As far as the 21 market sectors we follow here, the majority were down. Most of them were not huge moves. The largest ones were real estate, home builders down 1.65 to 1.42%. Transports and banks down over 1%. Same for brokers and drugs. Again, the area of strength today was the energy area, which continued to be strong, as well as semiconductors. They're still holding up very well. And metals and mining. Currency-wise, US dollar had a nice update at 0.4%. Cryptocurrencies pulling back here. I think Ethereum looks vulnerable, has a rising wedge formation, which I'll show you below. Commodities were up today, despite the dollar and the 10-year treasury yield rallying. The index, DBC, it was up about 0.5%. Crude oil up 0.65%. Natural gas up 4.2%. To me, that area looks potentially bottomed. We'll discuss that when we get to it below. Copper up 1%. Agriculture continues to be on fire. DBA, I showed this as a bullish cup and handle on the weekly chart back in January, and boy, that has played out. And Coffee up 1.5%. What I don't have on here is coca. That's been absolutely going parabolic. I have a chart below though, which we'll discuss. Precious metals up today. Gold up 1%, silver up 0.5%, GDX, the miners up 1.3%. Like I said, big move down in the bonds today and big move up in the interest rates. Next, item number 8 shows the economic news calendar, which I already went over. Like I said, we have the big non-farm job payroll report on Friday. We have plenty of other economic news here, and we got quite a few Fed governors speak this week. Let's go and jump to the index charts. The first chart below, item number 9, is a weekly snapshot of the 5 major indexes. Like I said, on the weekly time frame, the 9-week EMA is your first critical support, which we're obviously still well above for now. Next. Chart number 10, here's the Dow Jones. Again, nice pullback today. And again, we're still in the uptrend channel here. We haven't lost any support. We haven't even lost the 9 EMA yet. We have some pretty obvious MACD divergence building here. I do think that's eventually going to play out, right? Again, one thing, if we do get another pop to the upside, you know, the market tends to like these round numbers. The 40,000 round number is pretty damn close on the Dow. We got the 39,900, so it got really close. So that could still be a magnet if the market holds up, continues to hold up. Next. Chart 11, here's the daily view of the S&P. Again, no changes. Like I said, it's still in this uptrend channel. So your uptrend line here and the 20-day moving average is your critical support, right? We're still above the 9 EMA. Yes, we've had divergence. You can see the divergence on the RSI 5. MACD divergence has been here since December, right? That's why divergence is never a sell signal on its own. You know, divergence has been here for months, okay? Again, we are getting a bit stretched. Everyone knows that. The 60 stochastic is in this embedded area above the 80%. That's one thing to watch as well. When that finally loses the 80%, I think that'll be important. Again, for now, we continue to hold these uptrend channels. You just want to keep it simple. And breaking these uptrend line, the uptrend line of the channel, or these RSI support trend lines here, would definitely get my attention. Chart number 12, here's that system chart. This is the S&P 500 with the focus on the 60-link stochastic. When it's in an embedded state above 80%, you can capture mean reversion longs. When these fast oscillators work to oversold, such as the 2-length RSI, the 5-length Williams percent indicator, and the 4-length fast stochastic, you can see every time these have gotten oversold, while the 60 stochastic is over 80%, they produced nice objective buy signals. In fact, you have 10 buy signals since the December low. All these have been profitable. This is a little excellent systematic chart. Again, from our standard web page newsletter, we give you the live chart URL to this so that you can save it on your computer or stockcharts.com and check it anytime you want, instead of just viewing a static image from the newsletter or my video. Next. Image number 13, here's the daily KISS system. Again, no changes. Remember, the smart trailing stop remains at 50.80. By the way, guys, I just want to clear this up. I get this question a lot. People say, well, why is it different here than it is on the STS tables? It's because this is a custom version. I have different settings on this one that I'm showing in the newsletter that I have in the KISS tables, okay? So this has a little higher performance, and remember, on the KISS tables, I'm going to have some higher performance versions of the S&P 500 anyway. Okay, so that's what the difference is. I'm using different settings on this one. So this is the one we show in the newsletter. It went long on October 31st, and it's caught this uptrend nicely. Stop is currently at 50.82. Next, image number 14. Here's those 4 time frames with our indicators. So again, first and foremost, the ATR is supported in all these time frames. All right. Again, you know, we do have an end of bull cycle here on 130 minutes. That has my attention a little bit. So we'll see what plays out with that. Next, chart number 15. Here's a 2-hour view of the S&P. Again, just showing the clean uptrend channel that we're in. Remember, a few weeks back in mid-March, we pointed out the coil pattern inside the channel. We were looking for another pop to the upside, which we got. In fact, we briefly took out that last high last week went to 52.64. Honestly, not too far away from the 5,300. But again, we're still in the channel. Same channels as shown in the daily chart. Moving average ribbons are still bullishly stacked. But again, a break in this channel would have my attention. We're still in it. Next, driver 16. Here's a 30-minute chart. See the coil pattern, which we busted out of. We made that minor high last Friday before pulling back. Next, driver 17, here's the triple Qs. Again, we're still in this uptrend. You can see the moving average ribbon, been a very good guide. It was pitching a couple weeks ago, led to another pop. Here we could have a little ending diagonal forming. We could get another pop to the upside, brief pop and then down, or we already put a high in and we're going to break down. But either way, we're still in the pattern. But like I said, late stage, if you haven't been long this whole time, this is not the area to be taking swing long, in my opinion, because the upside is limited if we get that. Okay, symmetry, we need a pullback larger than about 17.5 points to break the uptrend symmetry. Next, driver 18. Here's another view of the triple Qs. Here's another way to label it, this ABC 1, 2, 3, 4, 5. Again, don't get bogged down on the wave counts. The problem with wave counts is there's always alternatives. You never fully know which was the correct count, but what's important here is your support trend lines, your moving average ribbons, stuff like that. Next, driver 19, here's a 2-hour view of the Qs. So here's another option. Like I said, there's always these many options of this thing. So one option here is a pullback in a wave 4. As long as it stays above that previous wave 4 there, you can still get another move up in a 5, or you got a top already in place. Next, driver 20, here's the weekly view of the Qs. This shows that nested 1, 2, 1, 2 count that I've been showing since last fall. Last fall, we had a wave 4 correction. That was the smaller degree. So we've been working on this wave 3 of 5. Once that is finally in, we're looking for some sort of zigzag wave 4 pullback. And that could be a pretty decent pullback, all right, before then finally going up again to new highs, probably sometime in the election. Next, driver 21, here's the daily KISS. Again, no changes. Smart trailing stop is at 427.70. System caught an excellent long just a few days off the lows in October. Driver 22, here's the 4 time frames. A couple things to point out on the daily up here. We have this end of bull cycle, so we'll see if that ends up capping price for now. Resistance. We're above the ATR on all the time frames. Again, just a lot of chop action. You can see on 130-minute price has been ping-ponging between the cycle indicator. Bounced off that support cycle recently. Last week sold off from the resistance cycle. Next, driver 23, here's the half-day chart. You get this nice uptrend channel that we're in. We haven't broken any supports. Like I said, once we start breaking supports, then you want to start paying attention. Like I said, the largest pullback's been about 17.6 points. So we need a pullback larger than that to break the uptrend symmetry. Next, just looking at some of the major tech stocks. Here's NVIDIA. So NVIDIA, again, don't get too bogged down into the wave count here. We have a wave 5 here or here, but it may not still be put in. For now, NVIDIA, if you want to keep it really simple, is still holding this 20-day moving average in blue. That's why I have it circled. It could still launch off of here and go and make another high. If it starts breaching this, you can see how the 9 EMA is pitching into the 20. The neck could set a thrust to the downside, especially a good close below the 20-day moving average. You almost always test the 50-day. But for now, we're still holding this. Next, driver 25 here is NVDD. This is the inverse ETF for NVIDIA. I didn't know about this until a subscriber pointed it out. But it's a way to play NVIDIA short. But it's got an interesting pattern here, kind of a bottoming looking pattern. The question remains, is it bottomed here, or does this get one more move down and set maybe a MACD divergence for a better low? We'll see. But it is starting to look interesting. Looking at the other FANG stocks, here's Google. Big pop today, so this is very strong, up 3%, taking out the recent highs. We pointed out a low risk long off that 200-day moving average in early March, which played out. Chart 27, here's Amazon. It's still holding up. Like I said, we're just going over these bigger cap tech stocks because they have such dominance in the indexes as far as weighting. So we always want to keep an eye on these. Chart 28, here's Meta. Still holding up here. It's kind of coiling for now. Hasn't lost support. Chart 29, here's Microsoft. Still working on this fifth wave move. Remember that correction and sideways move in February into early March. We viewed that as a wave 4. We haven't lost any support yet, so we're still working on this wave 5. It could have been put in back here, or this could still be unfolding. Next, chart 30, here's Apple. Apple continues to be weak. You know, plenty of problems there, and this is looking vulnerable. We had it as a short, by the way, back here in late February. Then it lost that support shelf. Rallied up and back tested. That was an excellent area to take a short. Finally, chart 31, here's IWM small caps, Russell 2000. In a pretty obvious rising wedge, the bearish view would have this as an A, B, C, D, E. Possibly E is in. That would be means a major top is forming. You have the MACD divergence here, which accompanies the wedge. Wedge patterns like this always have a divergence on the MACD. Again, this could still hold up in the pattern for a while, but it is definitely looking tired. Definitely a bearish looking pattern. Next. That does it for the indexes, guys. Here's a quick couple indicators. Here's the VIX. VIX has been moving up here a little bit, bounced off that support zone last week. Next. Chart 33, here's a system chart that I'm going to keep an eye on for a trigger. This is the NYSI 9 EMA crossover system. It's been on a buy signal since early November here. It's been an excellent signal. This next time it crosses below the 9 EMA here, I think it'd be an excellent sell trigger. Hasn't done so yet. Next. Moving into bonds, chart 34, high yield corporate, starting to leak oil a bit. Had made a divergent high recently. And you want to keep an eye on this because the market tends to follow this, and this is starting to weaken. Next. Chart 35, here's the 10-year treasury yield today, big pop. Here, I've had this channel drawn for a while, potential A, B, and if this is correct, we could be starting to move up in that wave C. That might be a catalyst for the market to pull back, and maybe even some of the commodities and precious metals. Chart 36, here's TLT 20-year bonds. Remember, bonds move opposite of rates. They're in the same channel, just inverted. So it looks identical, just like I said, flip it upside down. Looking at some individual sectors, here's XLC Communications, still holding up well. Remember, that's a lot of those FANG type stocks. I don't have the semiconductors in here tonight. I should have. That's also holding up as well. Chart 38, financials still holding up. Again, that's been one hell of a run. Pretty steep wedge there. Still hasn't broken supports. Little RSI divergence here recently, though. Next, chart 39, XLE Energy. This area's been on fire. Hell of a move from that trend line break back in February. Continues up, and away. Excellent move. Little RSI divergence showing up, but it's been one heck of a move. Some individual names that we've had on our watch list. Here's ExxonMobil. I had it on the watch list back in January. It's been a heck of a trade from that area around the 96 area off those dojis. It's approaching the September highs now. I think that's at least a magnet. And you know what this could form is a cup and handle. You could see the cup here. That if it gets up to here, then pulls back, you got a handle. Draw that in. So if it, let's say it gets up into those previous highs, pulls back, that can form your handle, and then you move up again. So that's something to watch. Finally, chart 41, here's Valero. Pulled back the previous week, bounced off its 9 EMA, trying to rally again. Now this next rally is setting up some RSI divergence, so it is getting a bit extended, but this had a cup and handle, and it's basically played out to perfection. Congrats if you've been in these puppies. Next. Moving on to commodities, chart 42, here's DBC. That's the weekly chart. It's up about 0.5% today. You can see longer term commodities are in this big multi-year coil pattern. Chart 43, here's crude oil, still holding up, kind of wedging up, approaching that 61.8 fib. We'll see if it stalls there or just breaks through it. Next, driver 44, here's UNG, natural gas ETF. Again, made a minor low last week, but to me, it was looking bottoming and today popped up. To me, this seems like a low risk long. Again, this area is notoriously tough to trade, guys. Be aware of that, but this does look potentially like a better low in place. Again, you could put a very tight, basically a stop right at the low there. Next. Driver 45, here's copper. Bounced off that 20-day moving average, trying to pop again a little bit. Driver 46, there's the weekly view. Remember, it broke out of the weekly coil pattern several weeks back. Driver 47, DBA, up and away, up another 1.25% this week so far. This cup and handle pattern I put out back in January has played out spectacularly. Congrats if you've been riding that. Driver 48, here's the daily. Again, all we've had is little brief pullbacks, but we've held the 9 EMA all the way up. Just momentum train here. Look at that MACD. Absolutely no divergence. Yes, it is overbought, but no MACD divergence. Driver 49, Coca. I mean, this thing making another high again today. I don't know what this is measured on, but you know, it was $4,000 back in early January again, and now it's over 10,000. That is one hell of a move. I joke to my kids, no more hot cocoa, no more Hershey bars. Anyway, just crazy move. Totally inflationary. Driver 50, uranium ETF. We've been holding this. Remember, it held this demand zone. Finally breaking out today. Expanding volume there. You see that? Broke through finally that 50-day moving average there in red, which had been struggling the last couple times. Finally took that out today. On expanding volume. Looks good. Next, driver 51. Here's CCJ. Uranium stock. Same deal. Nice pop there. Looks really good. Remember, long term, I like uranium. Looks really good on a monthly time frame. Next, moving to Bitcoin. Driver 52, here's Bitcoin. Bounced off those lows last week. Still haven't taken out the highs right now. MACD is lagging here. You can see how the MACD ran into its average and starting to curl down a little bit. It could potentially form a lower high here. Driver 53, here's the weekly view of Bitcoin. Working on this wave 3. Once that's in, we're looking at a wave 4 pullback. But then after that, we're looking for another move up in a wave 5. Maybe that takes us to 100,000. Driver 54, Ethereum. To me, I showed this last week. To me, this looks vulnerable. Looks like an obvious A, B, a bear flag, wave B pattern, lower high, and get another move down in a wave C. So this, to me, looks vulnerable. Some of the individual crypto stocks. Here's MSTR, which was on our watch list back in February, January. Our long trigger was 530. This sucker rallied to 2,000. Just absolutely insane. But that last rally, pretty good RSI divergence, MACD divergence, leaking oil here, not surprised. Still holding that 20-day moving average, but nice pullback from that divergent high last week. And driver 56, here's CLSK, another one of those crypto stocks. Early last week, we were looking for a bounce to a new high, which we got now. Whether it remains if that is the wave 5 or not, we'll see. But it did make a divergent high there and is now pulling back quite strongly. Next, driver 57, US dollar continues up. Nice move up today, and it's up here after hours. Here, added a supply zone, which could be the next target. Next, moving on to gold. Here's gold. Again, gold was up today about 20 points, well off those highs. As I stated in the opening comments, gold was up almost $50 on Sunday evening before pulling it back. Not a pretty candle here, honestly. We do have some RSI divergence, so I'm wondering if that is going to kick in or not. Now, this could be blown away. If gold continues pushing up, this divergence could be negated. For now, we're going to just follow the trend, but not a pretty looking candle today. But again, one hell of a move from that trigger back in January when we broke through that channel. Been an excellent trade. The stocks here have led as well. GDX-GLD ratio, you can see, has been turning up. You have nice triggers on those trend line breaks as well. Next, driver 59, here's the 2-hour view. So again, we're working on this wave 5. The bullish view would be this is a wave 3 of 5. You see the wave 4, wave 1 in green, 2 in green. This would be your 3 of 5. Next. Trevor 60, here's silver, up about 0.6% this week. This is the bullish labeling, this A, B, C, D, E, where you have a higher low wave E. If this is the correct count, this will eventually break out at this pattern. Next, Trevor 61, here's that monthly view of silver. You have this amazing 4-year coil that is forming, coiled spring. They call them coiled springs because energy builds up, and when they break through the coil, it can be a powerful move. Okay, this would objectively measure up into the 40s, which I could see happening. I think this could be a major swing trade on a breakout. ETFs are SLV and AGQ. Here's some individual silver stocks that I've been showing. AG, Majestic Silver, I showed it last week in this. This is the weekly chart. Got this long wedge forming, breaking out of the wedge here this week so far. Trevor 63, CDE, that's another silver stock. It's had a nice base that's been forming. It's been moving up. Again, I've been showing this since last week. Up 10% this week today. Trevor 64, here's the daily. You could see it had kind of a rounded bottom. Nice big gap up. Like I said, up almost 11% today. Congrats if you've been in this. Next, looking at the gold miners, here's GDX. Broke above the downtrend line of the coil last week. That is now potentially support on a pullback. Trevor 66, here's the daily chart of GDX. Again, we talked about this demand zone support area back in February. We broke through the channel there, basically the first day of March. That was the area to really take a good long position in GDX. Had a powerful move up, made another move today. There's now a supply zone right here. We'll see if that stalls price a little bit or not. But again, you want to keep it simple, price, just trail your stops up. Price is just riding these short-term moving averages up. The ratio looks decent. Trevor 67, here's another daily chart. Steve discussed this on the weekend. The bullish view would be that was a wave 1. That was the leading diagonal of a wave 1. You had a slightly higher low of a wave 2 or B, and we're working up in a wave 3 or C. The bullish view would be this is a wave 3. Next. Trevor 68, here's the 2-hour review. Again, last week we had a little consolidation which we broke out of. And Trevor 69, here's a 15-minute chart. Very short term, we have a little coil that formed today. We'll see what happens tomorrow, which way this coil breaks. Trevor 70, here's the bullish percent gold miners system, BPGDM. Gave an excellent buy signal back in February. This has now moved up to 50%, so it's basically in the middle of the range. Remember, bullish percent charts go from 0 to 100% only. So this is far from overbought. Still got plenty of room to go if it wants. This is an excellent system chart. Some other individual stocks. Here's RGLD, which we've been showing. Last week popped out of the flag into this supply zone. That's an area to take some profits. Trevor 72, gold, Barrick. Have been showing this since a couple weeks ago. Finally, broke out last week over the neckline. A little follow through today. Trevor 73, Newmont. Broke that resistance last week. Again, all these pulled off their highs today. Trevor 74, MTA. This is a small one. I've shown this last week as a pennant pattern, flag pattern. Been trying to break out of here. Volume starting to come into it. I like the weekly chart of MTA. You can see how this area around the mid-2s was big support and resistance area going back years. So an important area, and it did hold that. Finally, guys, let's talk about other trade ideas. Do a quick follow-up on some recent ones. Here's an aluminum stock, CENX. This one just continues to power up. It broke out over a week ago through that 13 area, and it's just momentum up. Trevor 77, Spray. This is one I had early last week as a long idea, ascending triangle. It gave you a great trade from that 940 all the way to 11. But you should have taken profits on Friday. You had that big, ugly, inverted hammer, and now prices pulled back. So that was a good area to take a bunch off the table. The trade played out, though. Next, Trevor at 78, Advanced Auto Parts. We had an originally long idea back in February. It's been a monster move out of this big potential inverse head and shoulder pattern. Still holding the 9 EMA for now. Trevor 79 W day, potential bear flag, which we've been showing, triggered last week. Still looks weak. We'll see if this starts to thrust down. Again, if you're short this, have a stop in place, maybe just above that last lower high. Trevor 80 ADI, this is one I've had on a watch list for a couple weeks. You had a low risk opportunity last week to buy at that channel, that lower trend line with a tight stop. That was a good area. Rallied all the way to the top of the coil where it's been finding some resistance. So it's still in the coil pattern. Trevor 81, here's CRNX. Potential breakout, needs to clear today's highs. Valid setup. Trevor 82, here's Tesla. Remember Tesla back in March bounced off the top of that demand zone, but it still has kind of a bear flag look to it if it wants to come down again. You have an obvious open gap down here that was never filled, could be a magnet. Trevor 83, PANW, here's a potential short. It might just be a quickie, a break of this trend line. I think it at least tags that 200-day moving average. Looks kind of weak. Trevor 84, Wells Fargo, it's a bank. In kind of a bull pennant here. We'll see if this can break out one more time. If it does, probably some sort of fifth wave move. Trevor 85, FMC, oil setting up, trade the direction of the break. Trevor 86, Wolf, nice little base pattern here. Resistance is around this trend line. Trevor 87, ANF, Abercrombie Fitch. Boy, this thing's been in a hell of a move. Forming a coil pennant pattern, one to watch. Trevor 88, Nova, energy stock, kind of a bull flag here setting up if it can take out that 620 area. Trevor 89, SGML, little nice bottoming play, bounced off the supply zone or the demand zone, breaking over a little trend line on some expanding buying. This looks lower risk off the lows. And finally, guys, like I said, we're going to keep an eye on these inverse ETFs. SPXU, still in the channel. But again, eventually it's going to break here. So if you're looking for a short in the market or hedges, keep an eye on these puppies. Trevor 91, here's the 2-hour view. Trevor 92, here's SQQQ. That's the Triple Q's ETF, inverse ETF, still in the pattern, hasn't broken. And Chartbert 93 FNGD, that's the inverse triple FANG ETF. It's been forming this base, still in that pattern. All right, guys, that'll do it. We'll see what happens this week, and I'll talk to you later this week. Take care.